next level. Everybody knew this basic stuff, right? For the most part. This is the basics. How do you turn the basics of this information into a real system that generates cash right now for your business? It's very simple. You turn your raising capital into a product. And we've talked about that, right? So you're going to construct your product. First, it kind of reminds you of the first step that we talked about to begin with. You need to decide what your asset type is going to be that will be the collateral for your investments. You need to make a decision. Are you going to offer secured debt to your private investors? Are you going to offer equity? Are they going to be an equity partner with you? That's 50-50 or whatever that percentage that you're offering them. Or are you going to pay them a certain return based on a note secured by the property? Make sense so far? All right. You can also do a combination. Combinations are good. Sometimes you might say, look, have you ever seen a mutual fund program? Anybody invest in mutual funds or have any money in IRAs and stuff or 401ks? Okay, have you noticed sometimes they offer you something where they say, look, here's our promotional rate. The first year you get 4%. After that, only God knows. However, the minimum will be 2%, right? What did they just do? They just said your preferred return is 2%. You can't go any lower than 2%. That's what we'll commit to. However, the sky's the limit. I mean, just imagine. If the market goes back up, you could be 8%. You all know that ain't going to happen. But that's how they pitch it. The minimum you'll make is 2%. And most people say, okay, that's cool. This guy has a big fund, millions of dollars, sure. I'll tie it up for freaking 6 years of my life with penalties if I walk out. Do you see what I'm saying? Construct it. The other question you want is how much money do you want? Do you want minimum $25,000, minimum $50,000, minimum $100,000? We've talked in coaching calls with some of you, and I typically say break your own product into 3 products. One that qualifies a smaller amount of money for the type of asset versus maybe a higher amount for the bigger players that you want to play with, so that you're drawing them out when you're doing a presentation. How long? Don't pitch a program where you're going to get your money back in 12 months, okay? If you get their money back in 12 months, you rock. But you're setting yourself up to fail. Because you're telling someone, I'm going to get your money back in 12 months. What happens if the market tanks, or if something goes wrong with your tenants and you can't refinance the property, or you can't sell it within 12 months? What just happened to you? You lost your credibility. Even if you get their money back, they're still going to remember you didn't keep your word. So if I say 3 to 5 years, and by year 2 they get their money back, I'm a hero. Rick walks on water. In reality, I tried it, it doesn't work. I really don't. But one thing I do know is that when I structure my offers with investors, I'm very conservative. All right, the next step is you need to have a credibility kit. Don't ever go into a meeting with a potential investor for your business without something that you can give to them so that they can go home and check you out. Now, of course, ours is like 30 pages long. You don't need 30 pages. All you need is like 7 pages, 10 pages. You want them to know exactly who your power team is. We've talked about this with your power team. What is your vision? What exactly are you doing? Be very clear and concise of that vision. All right.